And after 31 years, sounds like you went through a lot of crazy times, some
Yes.
good.
Yes.
Why? Why retire now?
Boom! Who do we have today?
Todd Tomlinson.
Dude's the ultimate dude down in the panhandle. You know what living room I'm sitting in?
Looks like a TV show.
It is a TV show from right around the era that you were hired.
My first property account was Janet Descant, a condo.
That's awesome. So Todd, what is the number one piece of advice that you give anybody coming into this industry with your 31 years of knowledge?
Buckle up. It's the Insurance Dudes podcast.
Todd Tomlinson.
Yes.
To the Insurance Dudes.
Welcome to the Dudes.
Dude,
question. Dude.
Great to be here. I watch you guys all the time.
You know what living room I'm sitting in?
Looks like a TV show.
It is a TV show from right around the era that you were hired at the company.
Give me a clue.
The main character was out of this world.
Oh, I know what it is.
What is it?
The main character eats cats.
Eats cats.
Eats cats.
He's kind of a stuffed animal.
He's an alien.
Oh, Elf.
Yes.
Yeah, there you go.
So Todd, how were those first few years? How was it going into, 31 years, man?
Do you know what's scary? 31 years later, I can still tell you my first auto account and my first property account. My first property account was Janet Descant, a condo we wrote. And my auto account was a doctor and his wife, and I spoke with her, she called in for a quote one time, and right when I was so I came back, got my agent number, I was cool to go, because you were sandbagging some stuff before you came back from home office training, but you sandbag a couple stuff as soon as you got your number. Mine was tax day when I got hired in 1990. So when I got back in the office, I wrote the policy effective that day, but that was Dr. Arialis, and he had, of all things, he had an NSX that we insured. Had to get an exception for it, but we had that and 3 other cars. But that was my first auto account. I had them for probably, 20-something years. And he retired, and he moved out of state. And my other client, she had sold a condo, and she moved, I think, back up to New Hampshire, wherever she was from after, 25 years. But those are my first 2 accounts. And when you write them, they stick in your head on stuff. So
we all talk about.
Did you drive the NSX?
That's a good question.
It's very important.
Do you know our company we can't name? They were the first ones that had to pay a claim out on the NSX. A guy of all things in Arizona lost control of it and backed it into a guardrail, and it peeled it like a can opener. And so they had to do it. So when we insured another one that came in, I had some clients that were medical equipment guys, and these guys were just loaded. And so they bought the first one in South Florida. And so I knew the guys from a friend of mine who had their other stuff, and no one would touch them except for our favorite company. So we went up and insured it, and it was a big deal. And, got pictures with the dealership guy, Rick Case at the time.
Wow.
And there's no one in Florida. And, it was pretty cool to see, and wrote it, gave him the policy, off he went. So
it was a good question.
Yeah.
So a question I have is, what was the perception of the big carriers back then to compare with how they are now, and the way people perceive the importance of that? Is it just as important as today as it was back then in the perceived eyes of?
Well,
clients?
keep in mind, Florida had really been hit, had a really big hurricane. I'm going back to the 60s, maybe. We had Hurricane David like in 77. I was like, I don't know, middle school. I don't know, whatever it was, eighth grade, I guess, going into 8th grade. So that's when it hit. And we thought it was pretty cool because it rained a lot, and we're, going out in the streets and puddle jumping and crap like that. But that was a big rain event. And then really until like 77, up until a lot of scares. But Andrew is the one that really changed the landscape. And it really made people think about what their policy had covered. At the time, it was all bells and whistles, man. I mean, you didn't have all of this junk out there like, an ACV policy. And I mean, when someone gave you the company policy, it was fully covered. There was no gaps. You didn't have a whole lot of gaps. The only way you could do it is if you just didn't write it for somebody. I mean, you had stuff like that. But basically, when you go out and write a policy, say, hey, Mr. Feldman, I'm giving you our Cadillac of a policy. It'll cover you. And I want to, from a cost standpoint, say it's, I don't know, we did one for the hurricane. We did a house for like $410,000. The premium was $405 for the year. Now that's a down payment, but that's how cheap it was getting. And then prior to that, as there was so much pressure on the carriers to compete against each other, and rates were just being driven down so much because they had a hurricane. And then once that hit, rates just started going up big time.
Because
but
all
to
the cash reserves are gone, right?
To answer your question, now I think you can probably strip down, you can cater, good, better, and best policy. At the time, you really had the Cadillac, and then you had maybe a Chevrolet. You didn't have going from a Mercedes-Benz to like a Yugo now that you can. You didn't have this big scale of policies.
What was the difference between the Cadillac and the Chevrolet?
A lot of it was just the coverages and hands they gave. Like when you ever come across a Chubb policy, it's kind of the same thing at the time. What policy we sold then was kind of like a Chubb policy now. You didn't have to worry about stuff. It gave you a lot of extra coverages. It gave you stuff. You didn't have to worry. It gave you unlimited additional living expense. So if you were out of your house for a year, you had some. Matter of fact, we had one in the Florida region. We had one in being paid still from Andrew. It happened in 2004. 14 years later, this guy was still getting additional living expense on his policy. It wasn't designed for that because he was in dispute with the company, but they still had to keep on paying. So once Andrew once he got all the claims got paid and everything was closed out, then they started filing for different, taking off guaranteed replacement costs. You don't have that anymore. You still have replacement costs on contents, but you didn't have this, hey, we insure your house, Mr. Feldman, for $225,000. If it costs $395,000 to replace it, we'll do that. That was guaranteed replacement cost. That's what it meant.
That's awesome. I kind of want to switch gears here for a moment.
Yeah, man.
And after 31 years, sounds like you went through a lot of crazy times, some good.
Yes.
Why retire now?
With that said, when Dad started to retire, he had formed an independent at the time in 2000, mainly to go back and get the business that we lost from the takeouts. And once we did that, we still were in South Florida. And again, the ideology of writing had changed tremendously to write in South Florida versus, say, Central Florida and North Florida. You go in at the same time in North Florida in the late 90s, you could write like Northern California, like you guys have in Southern California. You could write all day long and have no restrictions because the premiums are so low. The threat of a hurricane really wasn't there in Central and North Florida at the time. Now, again, that's their short thinking. But so again, as Dad built the independent up in 2000, we started taking all these people back. And then I said, you know what? Why don't we get more carriers to write that we're doing home, no auto, just home. We focused on. So when we did that in 2000, at the time you could still work out of your house. So my wife had worked for Cigna Dental Health, and she got laid off right when we got married in 91. So really for 3 or 4 years, she didn't do a whole lot. Not a whole lot as far as work-wise. She did a lot as a mom. She raised our kids and everything. So that's not to short side her job at the time, but that's something, as a mom, that's a whole another job and don't pay enough for that. But so in 2000, and once we got all the kids, they were born and raised 3, 4, or 5 years old, she helped out by writing the policies, the independent policies. And over time, she loved it because they entered PJs all day long and write, 15, 20, 30 policies in a day because that's how much stuff was coming in, because the market was just kind of in turmoil. So in that time, we grew, we joined an organization. She did join an organization to help out with carriers. And we went from out of 34, we went from 0 being last to number 1 in probably 18 months with that. And then that led me to springboard to get out of South Florida. I've been wanting to get out of South Florida. Not that I didn't like it, just from a business standpoint, you can never grow. It's like trying to grow in LA County. What are you going to write in LA County? You're not going to write a whole lot of business, property-wise. you just couldn't write it. We were in the same boat. So let me go north. So I went north into Orlando, looked to buy an agency, had one, deal fell through for whatever reason. And then finally in 03, I pulled the trigger to buy one in 04. I bought an agency. And that was a $11 million shop that I bought at the time. And
wow,
it was, you pinch me, I'd gone to heaven, man. I was like, man, this is woo. We were about a $5 million shop at the time, around 2004, the Miami office, and I had a $10 million one. I'm like, man, this is cool. We're going to just start minting money, because you could write property all day long. As long as you want to write property in North Florida, Central Florida, you could write it. Auto, no problem. Cross sell it, no problem. We had like 25% cross sell on auto on our homeowner book. It was almost, like they always say, shooting balls, I guess, out of the water, where it might be at the carnival, the same thing. We were just, hours or anything would stop you even the minute of the day to write more new business. So we were writing probably about 250 items a month at the time. Again, only having, you had All-Star at the time. That was it. So you write them COD all day long, and that was cool. And then I had 7 glorious months until Hurricane Charlie came. And once Hurricane Charlie came, it was like Shades of Andrew all over again. They company shut down the state, and then, fast forward from 2005 to, where we are now is kind of the same. They're in the property market, they're not in the property market. So you kind of had to grow, the brokered business to really make it grow. And then you weren't really helping the company bottom line, because you're helping your bottom line as an agency, but you weren't helping the company bottom line, because other than getting a percentage of the premiums from the carrier, they wasn't helping the company out. So we became our own little island, so to speak. Florida was.
crazy.
So
That's like California.
right. So then that kind of, once they kind of got their teeth sharpened a little bit in Florida, the company then expanded other states to do the brokering. So we're one of the few states that own 100% of our business, 99.9 of it. We own, the agent owns it. So in other states, like maybe you guys in California, I think you might own the rights to maybe 1 or 2 of the companies. Everything else, Advantage owns. So, and with that, that kind of changed the demographics going forward on the agencies, because you could still write and get paid for it, but in the end of the day, personally, I'd rather have ownership than compensation, because you can control ownership, you can't always control compensation. So
right.
So
Crazy,
when I left. Fast forward, when I left on 4/1, I basically closed on a Friday, went next door on a Monday, then next door. So I didn't really have to really start over again.
4/1 of this year.
Yep.
How was that?
It's sad. Over time, again, you guys coming in, how many years you have with the company, Jason?
3.5.
Craig?
12.
So
4/1.
Craig came in the end, where you still were having some meetings, and you still got to see people, whether it be, twice a month, once a month, whatever it was, you got to see them, and, you go out and do stuff. Over time, pretty much I'd say in the 90s, late 90s is when the company started to change, when they weren't as many meetings, their camaraderie wasn't there as much. It was almost like a forced, spreading out of the agents, where you couldn't talk as much anymore. And with that, so to say, how was it when I left? I missed, that, again, since 1966, there really wasn't a Tomlinson that was in the company anymore. And that's fine. Everything comes to an end. Not that it's, we'll bring out the Kleenex box here and shed some tears, but, it's just part of the camaraderie that you missed with that. But I think the pluses of leaving outweighed the positives of staying, if I can say it that way. So that's one reason why I made the decision to leave.
What would you advise if young Todd was coming in today?
Learn your craft the first year, and then start buying as much as you can while you can, when you can. Buy. Because you will never, ever. I don't care who you are. But you won't last long if you do it, but you will get terminated. But you gotta do it, and buy every year. Buy, like another agent says, you have to put yourself in a position to where the opportunity comes that you can pull the trigger and buy. You got to do it. Both you guys do that. I applaud you guys for that. but you got to bust your ass and you got to buy when you can. You might not think it's a good buy, but it's so much easier. The advice being it's easier to buy it and build it than it is to write it and make it grow, because you can't do it now.
Yep. Love it, man.
Well,
love it,
man. We have taken up way more than I thought we were going to of your time. So thank you so much for coming on. I hope everybody people are going to eat this up. This is awesome.
Hey, you've got to check out the Insurance Dudes Inner Circle coming soon, where you get extended interviews as well as live coffee talks in our private Facebook group. Join the mailing list today at theinsurancedudespodcast.com. Hey, thanks for checking out The Insurance Dudes. Hey, please subscribe. We got some really great stuff coming out.